So it's springtime heading into summer.
Yeah.
Right? What are you seeing so far with the real estate market at this time?
Well, in Columbus right now, inventory is still tight. Buyers are being pretty aggressive. We are getting a little bit more inventory, hitting the market right now, but buyers are going to have to be pre-approved, ready to go. And in a lot of cases, you're going to have some extra cash because, buyers are bidding above list and backing it up with cash.
Yeah.
So that's really what it's going to take to try to get into something right now.
It makes sense to me.
Yeah.
And I think, like you're saying, as a buyer, you got to come prepared.
Yeah. Rates have jumped up a little bit.
Yeah.
It's slowed demand slightly, but it's still pretty strong.
Yeah.
Still pretty strong right now, and buyers are out here getting aggressive. And as the weather gets better, I expect to see more activity.
Yeah, I agree.
Yeah.
I agree. I think that activity is going to increase.
Yes.
With that being said, and also from the investor side of things, I've kind of seen some people picking up rehabs, some people actually slowing down on the rehabs because of the extra cost of materials has greatly increased. But the amount of available properties at a discounted rate is dramatically down. So it's a very interesting market. We're going into a very interesting world, but it's also a great time for people to buy or sell a home. Because at the end of the day, we were at 5%, interest rates back in 2019. It's actually nothing new. Yeah. So let's talk about interest rate, right? And the concern that people have because we went from 2.5%, now we're at 4.5%, but COVID made it be 2.5%. What are your thoughts about interest rate?
Well, I mean, the higher the rates that are going to be, it's going to erode purchasing power.
Yeah.
So, that 2.5% jump can put you in a position to where you would have to, come out of pocket a couple $100 more per month, depending on your price point. Let's say if you did an average price of $200, it would raise that up, and in some situations you may not or may not qualify.
Exactly. Yeah. And I think too, with that being said, that 2019 we're at 5%. Now we're at 5% now, heading in 2022, eventually in 2023. Because of the pandemic, we saw a lower interest rate. The government was trying to give people relief for job loss and other challenges they were going through. And so I think that it's a very normal interest rate for us to be at this time.
Yeah. It's still not a bad rate. It's just that we were spoiled with the 2.5%, 3.5%, below 4 market.
Exactly.
Below 4% market rate. So people got spoiled on that. So it's we're still in a good situation. It's not that bad. 5%. It's really not that bad on a fixed rate loan.
Exactly.